All right, guys, welcome back to We Talk Money. Guess where we are?
We are looking fly in this studio right now. This is such a nice studio.
This is not a green screen. It's not AI generated.
Yes, man. This is great. I can actually reach over and give Trav a knuckle sandwich.
That's right.
Welcome, guys. What is this? Episode 121, I think.
Wow.
We're
Getting up
crushing
there.
it. Got a lot to talk about. I've actually pulled up quite a few questions from Reddit. I went on a deep rabbit hole and went into like all the personal finance and investing subreddits, and people ask some really, really good questions. And a lot of the answers, as you can imagine, are less than stellar. So I was like, well, let's go ahead and take a look at this and give our own unique perspective.
Here's my question, though. Were you able to find the next GameStop that they're trying to squeeze on Reddit yet?
I did. What's the one subreddit? Super Stomp?
Yeah.
I had to like unsubscribe from that because it was just the cope is just too much.
Ooh.
It's just people that, you know, have drank the Kool-Aid and there's nothing you can say to pull them off the ledge.
Well, it is interesting timing because the Dumb Money, the movie about the GameStop short squeeze, is coming out this weekend.
We
And
definitely
we are
got to go see
going.
that. Yeah.
Oh, yeah, definitely see it. We lived it in real time. We even identified GameStop as a potential short squeeze like
Played it.
6 months ahead of time.
Sorry, Trav, you wrote in this week's Daily Doe newsletter, and I noticed the tweet that you published on August 4th, 2020. GameStop is in rough shape long-term, but in the short run, they have plenty of liquidity to stay alive. Meanwhile, it's the most highly shorted stock in the market with 90% of the float short. GME has the potential to be an absolute epic multi-bagger short squeeze. I mean, I don't think you could have called that any more perfectly.
And I think at the time that tweet got like 12 likes or something. Probably most people just ignored it and most people didn't realize. You know, at the time, it was very shocking to me the level of short interest in GameStop's stock. We've seen some very highly shorted stocks over time. We say generally anything 15, 20% of the float short is quite high.
Yep.
GameStop was at one point like almost entirely short. Almost 100% of the float was short. I mean, that is a shocking number, and it's no wonder that it had one of the greatest short squeezes of all time.
Yep. And you guys nailed it. You bought it for, but what happened? You didn't manage it, I guess, perfectly.
I managed it pretty damn well. I mean, I missed out on a huge, that big run. I was scaling out into like 40, but I bought it at like 4.
Yeah, we bought it between 4 and 5, and I was I was out at 20, and I had a bunch of options that had expired in the fall because remember, that tweet came out in August. It started moving in September, October, and my options were like, I think, you know, a couple of months options, but it didn't have the mega part of the short squeeze until January of 2021.
Mm-hmm.
So a lot of my options had expired either with small gains or worthless, and then my stock, I cashed out at 20. It went on to go. And by the way, this has had what was it? I think a 4-for-1 stock split.
Mm-hmm.
So the prices don't match up, but
yeah.
the 120 peak or whatever there actually corresponded to a $400+ share price. So it went from 4 to 400 plus.
Yeah.
I was out at 20. It went another 20x.
I definitely missed the major squeeze.
Yeah.
And holy moly, was that a gut punch?
Oh yeah.
But you know, this is part of it, right? Like I had to remember what I did accomplish in that trade was very, very good.
You made money. And
Yeah.
it's always easy, I think, to underestimate what markets can do. You know, Bitcoin, short squeezes, housing bubbles, right? Like markets can just go light years beyond whatever seems rational.
Mm-hmm.
And how do you participate in that? I mean, we've said this a million times on the show. I think it comes down to like scaling out and holding a runner,
Yeah.
you know, taking some profit and let the thing ride.
And I mean, I held a runner, but damn, I didn't know it was going to go to $400 a share.
Yeah, y'all Redditors went crazy.
Yeah, man.
And it's interesting. You did, Nikki. At least we've taken some lessons from it. Like you said, Chris, I'm much more into holding runner positions now than I used to be. Nikki, you basically identified the Carvana short squeeze this year, which is essentially a 10x from the bottom.
Yeah.
And, you know, we've had some other plays. And interestingly, GameStop right now, there were some directors that bought the stock. We've got the movie coming out. Could it squeeze again? Probably not the way it did then, but it's still got a pretty high short interest.
If you look at the stocks with some of the highest short interests, we've got AI, we've got Beyond Meat, we've got Carvana still showing as a high short interest, and Carvana is actually setting up for a potential secondary breakout.
Yeah,
the last I looked at the chart,
is holding up quite well.
So I haven't looked at GMEs, but GME, I imagine, still has some shorts in it. So those are just a few names that are popping off on the high short interest radar.
Yeah. The key is like just getting in before everybody knows about it, right? It's like everybody thought the squeeze in GME was coming after the squeeze happened. You remember, like, everybody on Reddit was losing their minds, like, this is going to be the mother of all squeezes when it was up there at $300 or $400. And it's like, it already happened.
Yeah.
Yes.
And that's what everybody missed because they were high on hopium.
Yep.
And Wall Street bets.
Well, so anyway, yeah, Super Stonk is just, for me, it's a little too cringe to get into, but many of the other subreddits I think are really interesting. And one that I wrote about yesterday was this thread where somebody asked a question on financial independence, and this kind of took off. It has over 10,000 responses. They said, people making over $200,000 a year, what do you do? What do you do? And I used, you can't do this with ChatGPT because it has limits, but there's another AI called Claude. Have you used Claude?
I know Claude.
Yeah, so I think it can handle like 10 times the amount of text. I was able to get a majority of these responses in there, and I said, rank them in order, like the responses, like what are the jobs or the businesses that people started? What are the most common ones? Rank them in order, and like also pull out some quotes of like advice and like different things that people said that can help other people that are looking to create like a 6-figure income. And I thought this was really cool. It spit out, basically in order. And I obviously edited this, but, everything from like software consulting, professional services, medical, real estate, kind of the usual suspects, but it was just interesting seeing them like listed in order. And like some of the advice that people were saying is like, sales is where it's at. Good salesmen, especially in the right industries, make lots of money. I agree with that. I think skill is one of the most valuable skills. Tech startups are a good way to get rich if you join early and get lucky on equity, of course. So just some of these are like kind of obvious, but I just think it's interesting to be able to, use AI as a tool to like sift through thousands and thousands of responses and kind of get the signal out of all the noise. And
you mentioned too that like the one big broad takeaway was that a lot of these are just very specialized skill sets, whether it's, tax consulting, or it's a software engineer, or it's a woodworker who does high-end woodworking, for New York City furniture companies. These are very specialized skill sets.
Yes.
And that's something I think that people are finally starting to understand. Like, it's not necessarily the 4-year college path. It's actually whether you go to college or not. I mean, I did go to college, but I focused on a very specific skill set in investing. And so that was what, and particularly in stocks and public markets. So that is my specialized skill set, or one of them. And, there are many others, but focusing on honing a very specific and valuable skill set is really where it's at when it comes to wealth building.
Absolutely, man. Yeah, niche down.
Yeah.
Yep. So I pulled up a few questions. We can talk. Do you guys want to do markets first or look at the questions?
We should probably quickly run through what the markets have been up to.
Okay, cool. So I'll just talk about Bitcoin real quick. Bitcoin's been flat into 25K support. And I actually did a video this morning for the community kind of showing the potential for a short squeeze here and what that would look like. The TLDR on this for me is I'm waiting for either a washout to 20K to buy or a breakout above 30K. Right now, we're just in kind of a choppy zone, and it's really easy to get chopped to pieces here. So again, in the community, I talked about like what this could look like and like more details on my plan. But the idea is when you're stuck in like a really tight range like this, just don't overtrade. It's really easy to get chopped out. But one thing I thought was interesting is how stocks are just holding up like incredibly well.
Yeah.
And if we look at like New York FANG, which is large cap tech, do you know what the holdings are off the top of your head? It's like
Well, I actually don't know in Fang. I guess it's the NYSE Fang stocks, but there's some probably additional ones in there.
But basically large cap, the big 7 or 10 or whatever is like sitting at all-time highs. And the big laggards are the Russell 2000. And somebody posted a chart. I don't have this up, but where you basically, actually I can create it here on the chart, where you look at like the NASDAQ compared to the Russell 2000. And you can see that, I think I wrote this incorrectly. I'll pull it up in a minute. But basically when you look at like large cap tech compared to small cap, it's the most expensive it's ever been.
Yeah, it's mirroring basically where it was in like the .com bubble.
Yeah.
But I've seen some pushback on that analysis because it also is the case that we have, some of the most profitable and dominant business models now at the top of the QQQ. And yeah, some of them are probably overvalued, but these are also, some of the, again, best business models in the world, ad businesses that have network effects like Google or Meta/Facebook, or it's Apple, which is completely dominating hardware and services in North America. Now, is Apple expensive at 30 times earnings? Probably yes. But even so, that multiple deserves to have expanded over time because, of that push into services and software and high margin parts of the business. So yeah, I think there's some reason to believe it should be higher. Now, are we at an extreme level? Probably.
Right.
Yeah.
What did you guys see the Apple release yesterday?
I caught bits and
glimpses of it. I did review the new phone.
Yeah, I wrote a little like TLDR here, just going through it. I don't know, man. Nothing really stood out as like super impressive.
The camera looks pretty badass. I'm not gonna lie. Like
they've got a 5x optical zoom for the Pro Max, and it's
apparently lighter weight, which I actually have been waiting to upgrade. I'm sporting like a
wasn't it like
10?
A gram lighter though? I saw a meme floating around. It's like they spent $28 billion to like save 1 gram.
Was it? That was it?
I don't know.
But I will say like the latest models I do feel are kind of like heavy. So I'm down with a lighter phone.
Okay. Mm-hmm. Mm-hmm. Yeah, I mean, it's kind of the usual suspects, like faster, better camera, new design. Like nothing really stood out as like.
And they're changing the charging.
Oh yeah, that's the one kind of thing.
Major change.
But didn't the EU like kind of force them into that?
Yeah.
Was it like they're like, oh, look at this idea we had? It's like, no, we're getting pushed into a corner.
Well, now I think our MacBook charger will work on our phones and vice versa. Like it'll all be interchangeable.
Yeah.
I think.
Yeah, USB-C or whatever. Yeah, I mean, it's great. It's great to be standardized. But you're right. It's like the Apple stuff, I guess this criticism has been around for a while, but it's kind of incremental. It's all like incremental progress at this point. You're not seeing massive new feature additions, and that's okay, I guess. But, at some point, if we're going to continue to be innovative, Apple's got to put out some new stuff. And, they did have the headset that they're going to produce, a couple million units of next year, but is that the next big thing? I don't know. It's not looking like it will be yet. I don't know.
Yeah.
But yet the stock actually has been showing some weakness. So, maybe we will get a chance to see Apple a little bit cheaper.
Yeah.
After all of this. Obviously people aren't that stoked on it. They're not driving the price up or anything like that. So they're seeing the same sentiment we're kind of describing.
Yeah, and we're basically getting into a replacement cycle for phones. They're not going to be, the penetration's all high already, at least in developed countries. And so I really do think it may come down to at some point they release just products outside of phones. And then also they just need to continue pushing on like new services and software options and things like that to keep expanding profit. But
keep converting PC users to MacBook.
True. Yeah.
I think is an opportunity because I am a recent converter. Yeah, I'm a recent converter from PC to Mac, and I'll never go back.
Oh,
I'll never go back. I will never go back.
It's funny though, like in the trading world, there's still like old school trading platforms and companies that don't work with Mac. Like that's the
you have to run parallel. I have to run parallels, which sucks. But
annoying.
It is
like
what it is.
Wall Street, get with it.
It's worth it.
So, hey guys, I wanted to talk about altcoins real quick as well. It's been an extended crypto winter, as we all know. NFTs are in the dumps. A lot of alts are bleeding out. This is the total 3 market cap. So this is crypto's market cap, excluding Bitcoin and Ethereum. And in the show and in the community over the past several months, I've been talking about my thesis of like when I would actually step in here. And right now we're just still in this like grinding bear market, but there are signs of life. There are some interesting things popping and some charts that are showing relative strength. One being Prime. So the gaming sector, you know, we're starting to see like some tokens like this that are showing early signs of breakouts and just kind of continued bull markets. Now, I'm still extremely skeptical because if Bitcoin breaks 25K, I think all of these are going to crap the bed. But the point here is there are a handful of tokens specifically in the gaming sector that have been holding up and showing some strength. So could we be headed into another altcoin season? I don't think it's going to look like the last 2 market cycles. I think it's going to be more concentrated, but there are some interesting things happening. It's not completely dead.
Yep. And having cycle next year, that's obviously highly anticipated.
Yep, definitely.
You know, it's maybe we'll get lower interest rates again one day. That could probably help.
That would help a lot of things.
Yeah.
Speaking of the housing market.
Speaking of the housing market, Nick, you tweeted, what is your opinion on where we are with housing? I know we just got mortgage rates today that were still, was it today? I'm losing my mind.
Oh, CPI today.
CPI today. CPI. We had rates recently, but they're still above 7. CPI came out, was a little bit higher than
slightly higher than anticipated.
Markets liked it okay though. Markets weren't shaken. Markets are actually up today.
But you've been talking about an acceleration in CPI that is to be expected. Most people professionally are expecting it.
Yep.
It's everyone else that's all up in arms and acting crazy about it.
Yep.
Well, what was driving it this time?
Energy prices mainly.
Okay.
Almost everything else decelerated. And Shelter, which we've talked about over and over and over, and I'm just going to talk about it again because I just need to reiterate it. Shelter is starting to put it's decelerating within the CPI. It's going to start putting downward pressure on the CPI later in the year and certainly into next year. But it hasn't been putting enough pressure yet on CPI to offset some gains in things like energy, and particularly gasoline prices were a big problem in this most recent month's reading. So otherwise, though, a lot of other categories within the CPI are decelerating, and so that's generally good news. So that's, I think, why the market didn't care too much that it came in at 3.7% year over year versus the 3.6% that was expected. And we already know, based on the inflation swap market and forecasts of future inflation from the bond market, that the bond market's already expecting this month and next month the rates to be higher on a year-over-year basis than, you know, what we've seen in the past 5 or 6 months. But then it starts to dip again. So that's kind of this weird head fake that we have. And yes, there's people that are going to freak the F out.
Well, people are arguing about the wage increases because there's a lot of concerns about union.
Right.
The auto.
Yeah, UAW.
UAW. Right now, I think this week we're going to either get a strike or a deal or something like that's going on. And I think a lot of people are worried about wages having an impact on inflation.
They're asking for a 30% wage increase. Now, granted, that's over, I think, a 3 or 4 year time frame, but still, you know.
They're looking at the UPS guys going, they're making bank.
That's right.
Granted, what percentage of the population is this going to affect?
Unions only represent, in aggregate, not just the UAW, but all unions in aggregate, about 9 to 10% of overall jobs, I believe, in the U.S. economy.
So, you know, is that a huge concern in your eyes? Or is that something that can probably be managed?
I think it can be managed, but I'm not 100% certain on that.
Yeah.
And there's a lot of arguments now happening because of what's happening with unions about the wage price spiral. And this is something that really created problems in the 70s and creates problems in highly inflationary decades where there's this, you know, cycle of, well, prices rise, so then people start asking for wage increases. The wage increases continue to drive prices higher, which then drive
higher prices drive higher prices.
Right.
Exactly. And we actually talked about this, I don't know, 18 months ago, 24 months ago, when we first started to see signs of inflation rising. And this was a concern, was if the Fed doesn't get this under control early, then we risk wage price spirals and inflation becoming a huge problem. So we were pretty right. Now, the wage price spiral has been relatively contained thus far, but we could be seeing some of that catching up here. And if it were to become a bigger problem, particularly in the services sector, I would start to get worried.
So we'll have to watch wages going forward.
Yeah.
The thing that I mentioned months and months ago was that the big, issue was going to be oil, because if oil prices go back up, that's what's going to trickle into everything else. Trickles into airfare, trickles into consumers' products, all of it. So that's kind of been my concern, is our oil price is going to skyrocket. And I've been thinking about it. Everybody's asking for, or not asking, but everybody is saying that we're going to get a recession. There's, slowdown in Europe. China's not really popping off like we had thought. So what is going to drive oil prices higher if we're going into a recession has been my thought.
Yeah. Well, and it's interesting because higher interest rates actually disincentivize more production. So in some ways, the Fed is actually creating higher oil prices. They're not directly creating them, but they're keeping incremental production from coming online by being at such high interest rates, because it gets harder to finance new projects and, finance debt for a lot of these energy companies. So the high rates actually disincentivize more production, which makes it harder to get oil prices down. So there's, the Fed's kind of working against itself in that sense. But yeah, I think ultimately it all comes down to employment. If we have a mild recession where where unemployment remains under, say, 5 or 6%, oil prices could probably stay pretty bid. But if you get a situation where all of a sudden unemployment starts rising rapidly to 7-8%, then I think you have a problem for crude. And that would probably actually start to impact demand significantly.
So that leads us back to housing, because housing is a huge component of the CPI, right?
Yep.
There's an argument right now around Airbnbs. It's called the Airbnb bust. And some people are claiming that we're saturated with Airbnbs. People are not cash flowing in these properties, and they're going to flood the market by having to sell. And then there's the flip side of that. There's a gentleman, Logan, I can't remember his last name, versus these couple of ladies that have been battling it out on Twitter. And there was a Twitter debate on Saturday and everything. And so one side is saying we're going to be flooded with supply in the housing market. It's going to maybe not crash prices, but impact prices significantly. And then the other side is saying, this Airbnb stuff is a small percentage of the overall housing market, and we have plenty of room for supply to come online because housing prices have rallied so much. So those are the two sides of the coin. I agree with the side of the coin where the Airbnb stuff is probably not going to be as impactful as people are making it out to be. There's going to be a mix of people that can afford to weather the storm in their Airbnbs because they have low cost basis or they paid cash. There's going to be some people that were dumb and bought, at the wrong time and didn't think about high interest rates and how that was going to impact them, and they might be forced to sell. And there's I think it's going to lie somewhere in the middle, but I don't know if I foresee it crashing the housing market per se.
So basically it's not as systemic as an issue as the credit issues of 2008.
I think it'll lie somewhere in the middle.
Mm-hmm.
And I also think certain markets will be affected differently than others. Like Austin's kind of messed up right now.
For sure.
If Austin has more supply come onto the market from short-term rentals not profiting or whatever, it's already not making sense to buy a home. I tweeted this today. I was looking and I was like, I can't really find a reason to buy over rent right now. You're doubling your payment if you're buying in a lot of areas.
Yeah, so how does that gap close? Is it either prices come down or rates collapse or rents go up, or a mix of two or three of those?
Yeah, and rents are already declining in Austin.
Really?
Year over year, yes. There are many markets where rents are actually declining year over year. And so I think the Airbnb thing is an interesting debate. I just don't know if it's enough to be that big of an impact on the housing market. And plus, we could use prices coming down. New home prices are going back up to all-time highs, and existing housing prices are at all-time highs.
Wow.
Okay, so process this for a second.
What's
the mortgage
rates
rate
are
at?
continuing to make new highs.
This is what I'm saying. This housing market has not gone as expected for anybody.
Right.
We all thought higher rates were going to lead to lower housing prices, and it's doing the exact opposite. How? Why?
It is though, in some markets, like you mentioned, Austin,
yeah.
I know I've seen a pretty significant increase in inventories and prices have adjusted downward somewhat. But yeah, on an aggregate basis, it seems like, particularly for new homes, prices haven't budged down a whole lot. But yeah, I think, people have such PTSD over what happened in 2008. A big part of that is the banking crisis that really exacerbated everything. And so I think we could have a housing market overall that cools, or a housing market that really starts to go into a downturn without a crash. But that's what people don't really understand because of that recent episode of 2008. They automatically equate a housing downturn with an entire economic collapse.
Exactly.
But the one big difference was the banking crisis. And I think that's what people forget. So for me, I think it's okay. I think we could have a housing downturn to be okay. Even Airbnb, their average daily rates across the company in aggregate were only down like 1% last quarter. And their revenues were up 20% because volumes are still up so much. So we're not seeing an Airbnb crash yet in Airbnb's actual financials.
Right.
Could it happen in a quarter
And you did
or two?
what was that a couple months ago? You called out the guy that had the viral tweet that was like, he said their bookings were down like 50% or something.
Yeah. And also people get messed up. I saw some maps being posted on Twitter of Airbnb supply. A lot of that quote unquote supply is just from people that will rent for a weekend or two. Like here in Austin, we have big festivals that happen once or twice a year. And there are some people that live in their primary residence, but that will rent it out for a couple of nights during those festivals. And that can sometimes get included on these Airbnb inventory maps, when in reality, these people's homes really shouldn't be considered ongoing Airbnb inventory. So sometimes people use data like that to make their point when it's really misleading.
There's a lot of info we don't know, essentially.
Pretty sure there's a whole book on that, how to lie with data.
That's right. Yeah, that's right.
And the thing is it goes back to my theme. Everything is normalizing, and when you look at housing prices, how much higher they still are from the pandemic, the start of the pandemic, they still have a lot of room to come down and still be higher, right?
Yeah,
like,
true.
That's what I mean. Even in Austin, we're getting a correction, but a lot of people's housing values are still higher than pre-pandemic levels.
Yeah, it's sort of like when we saw all those normalizations post-COVID and a lot of other things, like let's say e-commerce spending. E-commerce spending went parabolic and then had a sharp correction back down. E-commerce growth rates have slowed a lot, but they've basically come down back to the long-term growth rate. So they're still growing on a nice, smooth, long-term growth trend. It's just that it went from plus 30 to plus 7. People freaked out. It's like, actually, plus 7 is still pretty good, like long-term. So like, we're seeing housing do that on a very delayed basis. It was like prices were plus 50. Now maybe they need to go flat or even be down a little bit for a couple of years. That's okay.
That's what people were doing with the retail earnings. They were like, retail earnings are certain companies were down. And I'm like, have you looked at the revenue trend from pre-pandemic? They're still growing, revenue overall. Yeah, they were down a little bit from the craziness we saw in 2022, but they got a great trend going. Overall. Like people need to zoom out on the data here. It's so important.
Oh, here we go. Here's another one.
Yep.
What's this one?
This is eggs.
Oh.
So this is, what was it, earlier in the year or late last year that everybody was freaking out about the price of eggs. And I don't pay attention to grocery prices, but did you notice like in the store, what were eggs?
I was dying. I was like, $10 for a damn dozen eggs? Like,
that is high.
This is insanity. I can't remember the exact price, but it was a lot.
So I pulled this up. Somebody posted eggs. This is on Reddit, of course. Eggs are now cheap. Eggs at Walmart are now dirt cheap. A 60-pack for me is $4.50.
That's a deal.
While last year they were $12 for a 60-pack. So that kind of lines up,
You can get 60 eggs for under $5?
I guess you can now. People were hoarding chickens when egg prices went up. They were hoarding chickens. I know someone personally that was trying to buy chickens at the peak and they couldn't. They were all out of stock.
Wow.
Dang.
Yeah.
But yeah, I mean, basically, egg prices are down by over half. And, you know, like we've said, and we didn't come up with this, but the old quote about commodity prices is, what's the cure for high prices? High prices, right? When you have the price of a commodity that goes up, it increases or incentivizes more production. And then also people stop losing their minds and then prices normalize.
Normalization.
But you can even see, like, just over the past 20 years, if you look at kind of the average price of eggs, it's been kind of slowly climbing from $1 to like $2 or $2.50.
Mm-hmm.
And in hindsight, this big explosion is just going to be a blip on the map. So.
Yeah. Yeah.
I don't know. I don't know if this is just an anomaly though, and like what other food prices are looking like. I haven't checked, you know, other soft futures or meat prices or anything like that. But
yeah, and Colin Roche had a great tweet this week that showed that, you know, and we've talked about it too, how consumers feel the cumulative effects of inflation. They feel the level of prices. And not necessarily the rate of change. Like financial markets, we focus on, well, what's the year-over-year growth rate? Is it decelerating? Is it decelerating, accelerating?
What you're talking about.
Exactly. Yep. So in that tweet, he shows, consumers still feel the cumulative effects of inflation, the higher price levels, you know, over time that we're now paying. In financial markets, we focus on, inflation's down from plus 8% to plus 3%, plus 3.5%.
But it's still increasing.
And it still has increased over the past couple of years. So, yeah, it's.
I think it's more important than ever to focus on what, like, you know, we look at a basket of goods as investors and macro analysts, but we need to really focus and zoom in on the actual good. Because when you do that, you see a whole different picture.
Mm-hmm.
And so, I think that's something people can do too.
Yep. Well said. You guys want to jump into some of these questions?
Absolutely.
I just kind of cherry picked some good ones off of Reddit. I mean, you can find a whole range, but again, I just find so many questions that when I read the responses, I'm kind of let down. Nikki, this is one for you in the investing subreddit. Should I wait for the market to bottom to create my 401k?
The old market timing question.
He's a 35-year-old, worked his whole life and never had the option for 401k matching until last year when he started at a larger company, but he opted out.
Oh, no.
Because of the way the market looked.
Okay.
You don't like free money?
I think this is this sounds crazy, but this is like a really common thing.
No, it
right?
is. It is.
Let me give you a little more color and then you can answer it. I make between like 70 and 75K plus a company vehicle. I pay $2,000 a month on rent. He's so just starting the savings game in his mid-30s, but wants to have something to show by, basically in the next 10 to 15 years.
Yeah. So the first question there is his age, which you said he's 35.
Yeah.
He's still young. Like, that is still young. And when you're in a situation where you're trying to save money for the future, when you're in your 30s, just start, right? Don't think so much about where the market is and whatnot. Just get some money invested, because remember, you're going to be getting paid dividends if you're investing passively in ETFs. Those dividends are going to reinvest when the market's low. That's going to help you out in the long run. So the fact that he's getting a match and he's not participating in the match, I don't care where the market is. I don't care if the market's at all-time highs. I don't care at all. Get the match, because the match is literally 100% free. It's 100% return on your money. You put in zero. You have to put in zero capital and you're getting all of that capital, right? Plus the growth.
You're literally lighting money on fire.
You are lighting money on fire. So the first step is absolutely get the match and contribute just enough to get the match, because you don't want to, what I call cash, it's a cash strap trap that people do with 401ks. They say, I'm going to put 15% of my income into my 401k, and they only need to put in like 6% to get the match. And they end up cash strapped at the end of the month, and they're barely paying their bills.
So they're over-investing?
They're over-investing for their cash situation. So I say, get the match and then adjust from there. If you want to contribute more, make sure you've got the cash flow to do it. But as far as like trying to time the market, if you're not like us and people in our community that are in the markets day to day, really riding trends and paying attention to trends, you're not going to do well at timing the market. So just invest, and it's time in the market that's the most important thing for you in your scenario versus timing it. So I would say get that match, start investing, get, as long as you've got the cash flow to do it, and an emergency savings put aside. Do not delay.
Well said.
Start today.
Just get in there. Do something.
There's no 15 or 20 year period in U.S. stock market history where stocks haven't been higher. So like even if you invested at like peak, a peak moment, you would still after 15 or 20 years be higher than where you would have been. And by the way, you're putting in money along the way and getting the match. So
you're dollar cost averaging with free money.
Exactly. So you're going to get those low times. Like you're going to get money in when the market does fall. If you're dollar cost averaging from your paycheck.
Even if you were to just let it sit in cash, which is obviously not what you want to do long term, but like getting that match, allows you to at least get that free money in there, and then you can decide to be tactical with whatever else in the account. But like again, leaving money on the table is just like, it's just crazy to me.
Yeah. I think too many people get caught up in the timing of the market when they just need to think the big picture.
Mm-hmm. Well
said. So this question is kind of like, I picked this one because it's on the opposite side of that spectrum. So you have a guy, mid-30s, who's like just now starting to invest, right? This other side of the spectrum is a successful entrepreneur that, this is in the Fat Fire subreddit. So Fat Fire is basically wealthy people that that are focused on financial independence and retire early. Mm-hmm. And there's different like niches here. You have lean fire, people that are trying to retire early on like a shoestring budget. And then you have fat fire, people that are selling businesses for tens or hundreds of millions of dollars or, things like that. And I thought this was interesting because I was recently talking to one of our friends that hasn't sold his business yet, but is making a shit ton of cash flow, has a lot of money just sitting in cash, and has brought up concerns like this. So the question is converting the business into a lifestyle business a stronger goal or a better goal than just retiring early? Okay, so he goes on to explain, when you retire early, you have high time freedom, but you have a new burden, which is what to do with that time, right? I want to make the case that retiring early, matters less once you own a business with enough margin to delegate as desired. So basically, like, I think the point he's trying to make here is like, why retire if you enjoy your business and it supports your lifestyle? Because if you just quit, it's like, if the business is the thing that fulfills you, why do that? And he goes on to say, like, I see no reason to retire early anymore. Technically, I don't even see a reason to be financially independent, although that one would come anyways. But he was asking, do other business owners agree or disagree with the idea that FIRE is not a big goal? I feel like we have the best job overall, since we as entrepreneurs are the only ones that can fully customize what we do each day. I thought that was a pretty interesting question. Yeah. And there were some good responses that I also used ChatGPT to kind of aggregate and come up with some different opinions. But
I mean, we're a little biased because we, at least you and I, agree that just designing a business that you love to be doing is more important to us than retiring. Like, we would be so bored. Like, we could retire now, but we don't want to. Like,
I've taken many retirements and it always gets boring. But.
Yeah. So I guess it does depend on who you are as a person and what your goals are. Mm-hmm. If some people may just want to chill on a beach and do nothing, right? That may be the best dream ever. But I think most entrepreneurs just we're not wired like that. At least I think.
Yeah, I think that's generally true. And like you said, it can be case by case, but especially in the cases where, and this guy mentioned specifically the ability to delegate so that you're not in the day-to-day if you don't want to be.
Right.
And you can maybe still be a little bit involved, but essentially having a lot of your hours still free, then aren't essentially you sort of pseudo-retired without being retired? You're sort of like getting the best of both worlds. It sounds pretty sweet.
Mm-hmm.
Definitely. Yeah, and some of the responses, if you're generally enjoying your work and find it fulfilling, you don't need to retire early. FIRE really is all about having freedom and flexibility to choose how you spend your time. I think that kind of
Well
nails
said,
it on
yeah.
the head. Yeah.
I mean, I could see a situation, maybe somebody decides that they want to spend all of their time trying to become a professional pickleball player or something like that, or,
True.
or a professional, sailboat racer or whatever the thing may be, a woodworker. I don't know. Maybe they take up a hobby they love so much that, they don't want to spend any time on their other business, in which case, maybe that's an alternative. But again, yeah, like a lot of people think of retiring as sitting on a beach and drinking margaritas, and that doesn't sound that great after doing it for more than a month.
Yeah. Ugh.
There's like a spectrum of experiences. On one side, you've got people that are working a job that they hate, and they're hearing us have this conversation like, what the hell are you talking about? I would kill for that, right? Yeah. And then you have people on the other side of the spectrum, like some friends of ours that have sold businesses or have really profitable businesses that are like, I'm having a hard time finding fulfillment outside of work, right? So people would hear that and go, oh, poor you, woe is you.
A lot of retirees struggle when they retire.
Yeah.
They have like mental struggles big time with the whole thing. A lot of that doesn't get discussed a lot.
Yeah, we spend a lot of our lives finding purpose in work.
Yeah.
Mm-hmm. All right, let's go to the other side of the spectrum again. I'm 16 and I have $12,000 in the bank.
Nice.
Ooh,
well done.
This person's going to be rich as hell, man. What should I do with my money instead of letting it lay around and not grow?
Oh, no.
I've worked at a grocery store for a year and a half and saved $12,000.
Wow.
That's cool. Must be obviously living at home. What should I do with it?
First of all, to be 16 and have $12,000 is like really, really awesome.
Yeah.
Whoever taught this person how to manage money is hats off.
So the first, I want to hear your response to this. The top response was a high yield savings account earning 5%.
At a minimum, yes. That's the start.
I think if you're 16, hell no.
Well,
be 100%.
It depends.
Stocks and 100% high risk assets.
It depends. What's the goal? What's the goal? Does he want to buy a car?
True.
Does he want to save for college because his parents can't afford to put him through college? Him or her? I don't know what it is, but what is the goal? Is it to be able to leave the house and get their own apartment and survive on their own?
Need the cash.
But if they don't, and they're just trying to literally save money and invest for their future and everything else is figured out, hell yeah. Roth IRA.
Okay.
Let that grow and let that grow for a very long time. ETFs probably, right? Like S&P 500 like stuff.
Some Bitcoin in there. Don't forget the Bitcoin.
Maybe. And then let that ride.
Yep.
For decades. And you're going to be set. This is the thing that a lot of people miss. The younger you start investing, the less money you have to put in later.
Right.
We call that front-loading retirement or front-loading whatever, right? He could be doing a major front-loading thing right now and be set.
Yep. Yeah, by the time he's like 25, he could be, his retirement could be completely taken care of, and then he can just worry about higher risk, higher reward stuff, right?
Yeah.
All right. Another question, how to handle debt and not be poor. I work 2 jobs and I'm still broke. Job 1 pays him like $38K, net $23K. Job 2 pays $50K, and they walk away with $27. That sounds like crazy high taxes.
Yeah, those tax rates are super high. I don't wonder if they're like Canadian or European or something.
I'd be curious if the net is taking into account 401k contributions.
Because that gross, that $38K gross getting taxed down to $23,400 is a extremely high tax rate for that bracket.
There might be a 401k contribution happening.
Yeah.
And they're calling it a net, but it's really not a true net.
Yeah, they don't mention any of that. It says, I feel like I can't get out of debt. I work 65 hours a week doing 2 jobs and barely make $1,000 a week. I have almost $28K in debt.
Hold on. I need to run some quick maths here. But this sounds like it could be a cash trap or what did I call it earlier? Cash strapped trap.
Right.
Right? Like someone that might be contributing too much to a 401k. I don't know. But yeah, that take home does seem.
Or maybe they've got some sort of like alimony payments or something that are coming off there.
Yeah, there's a lot that could be going on there.
Yeah, somebody was asking, it makes no sense that you're losing 45% based on
not at that level of income. Shouldn't be.
Yeah.
Right.
But anyway, let's just talk about like at a high level. Let's assume that, maybe this is somebody who's not investing and maybe they're in California or Europe or Canada or somewhere with high taxes or not. Maybe they're in a low tax place and they just feel like they're getting squeezed. I know a lot of people are in this situation. That's why I brought this one up too. We want to cover like the full range of situations and people that are working their ass off. This guy or lady has 2 jobs, barely making it, has a lot of debt. What do you do if you feel like you're under that pressure, right? Like what are some things that people can do to get out from under that crushing debt and to have some extra cash flow?
You want to?
Well, I think the first thing that comes to mind is trying to address the income side, which is, are there projects you can be doing on the side? Is there a skill set you can develop on the side? Maybe it takes a year, maybe it takes 3 years, but that can get you to a new higher level of income that can help you, basically pay down that debt faster and, get to a point in your life where you don't feel as stretched.
Yeah.
That would be the first thing that I would think about is, right now you're working 2 jobs. You don't really probably have the capacity to do much more, but is there some other way to get that leverage? Is there some other way to carve out time to develop a specialized skill set or to sell your current skill set in a better way or get a raise somewhere else? Just, figure that out, because I think that's step number 1. And then obviously the step number 2 would be to like focus on the debt side and the saving side.
I feel like a situation like this needs like a deep dive. Like you have to really dig into the budget and the expenses to see where the money is going, because you would be surprised how many people have the cash flow issue and they're doing things that they shouldn't be doing.
Like they have an $800 a month car payment or something.
They have a high car payment. They do Uber Eats 5 times a week. They are spending way more than they make, and they just like
So there's like easy cash flow leaks that you can plug.
For sure. Like you would be shocked at how many budgets I've looked at, and I'm like, oh, well, you could save $500 a month if you stop ordering out and you stop doing DoorDash and, do this, and this. And so, or lower your 401k contributions or find a way to save on taxes somewhere. Like there's definitely a requirement to dig deeper if someone like this is losing that much of their gross.
Yeah. So basically it sounds like the immediate thing is plug cash flow leaks. And then like Travis said, focus on trying to get that income higher. Because I did the math. They're working like 65 hours a week, say 50 weeks a year, divided by, or looking at their net, they're only bringing home like 15 or 16 bucks an hour. So like, I guess their gross would probably be closer to 20 or 25, but like, how do you basically double your income and cut your workload in half? That's where I would think of that, right? Like
I would think, where do they live? Can they rent out a room?
Can they drive for Uber? Can they drive for UPS? Apparently UPS drivers are making bank.
But I mean, to work more than 65 hours a week, like at that point, it's like, shit, a side hustle's hard to do when you're barely scraping by on that much work already. It's like, maybe quit the one that's only paying you $37,000 and, try to figure out a way to double your income and cut your workload in half.
Yeah. And granted, like, depending on where you live, it really is really expensive to survive in the US, So I don't want to discount that. That is absolutely a fact.
Yeah.
But a lot of times there are some things that we can optimize, to help.
Gotcha.
Yeah.
Let's answer one more question. How are people 21 to 24 affording rent, luxury items, and so many vacations? I thought this
they live at home with their parents. They're TikTok stars.
22-year-old female recently graduated from university. I paid for everything myself throughout those years and had to work hard throughout it to afford it. Needless to say, it was fucking hard. Recently got a job in my field of study. But, she's basically pointing out like you said, the Instagram, lifestyle of people always having the latest cars, going on vacations, basically showing the highlight reel. And she's living in the real world. She's a hard worker and looking at other people that seem to be making it seem so easy. Mm-hmm. Right? Like I think a lot of people just highlight this like imaginary bullshit life on Instagram that either their parents are paying for or something like that. But I just got to respect somebody who's like looking at that, working hard, trying to make it in life, and then just like noticing that something's not right there.
There's a lot more people that are getting help too than many people realize. A lot of people either getting help from their parents, or, you know, they were passed some sort of assets from family members, or they have some sort of advantage. Like even little things add up over time. Like, you know, people that have a car that was bought for them, or, you know, if they, you know, didn't have to take on student loan debt, even things like related to your job, you know, someone that works even, a middle manager, or even just a low entry job at a FANG company is getting great healthcare benefits, food all the time. They're not having to pay healthcare costs and food, you know, for 5-6 days a week. So those things can add up too. And then you got also people, like you said, that are probably just, you know, taking on a lot of credit card debt. You may not even realize they're running up credit card debt, going to the club, going shopping all the time. Like, so there's a lot of factors in the situation that you can't see behind the curtain.
That's very true. A lot of it's a facade, you know, but a lot of it just sucks that I would hate to be growing up in today's world of social media, because it'd be so easy. Like we didn't have to deal with comparing ourselves to others because of, you know.
We did, just in a much less extreme way. Like,
yeah, like this is way in their faces in a way that we did not experience. You know, so that's unfortunate, but it's also motivating too. So I guess you can see the plus side of it as being a motivator.
Yeah.
But
I mean, that's how I used it. I had the dream board with the cars and, you know, travel and all that stuff. And it helped. But I guess you can use it in a healthy way or a toxic way. You can look at it and be jealous, or you can look at it and say, wow, I want that. I'm going to work really hard for it.
Yeah. Right. And the fact is, we don't know what's behind the curtain with a lot of people on social.
Yep. All right. Well, what are you guys looking forward to over the next week?
I'm going to play a lot more pickleball. I mean, I have been playing pickleball, but I'm going to play more because the weather's actually getting decent. It's not 105 this week. It's only 95.
Nice.
I got to get out on the courts too, for sure.
Yeah.
Very cool. Well, I'm just sitting here waiting. I'm poking the charts, just waiting for some volatility here. And
it's interesting to see the S&P 500 kind of putting in like a coiling pattern. Like a triangle. It looks like it might start to coil for a big move.
Yeah, I mean, on the bear side, you've got a potential head and shoulders here. On the bull side, you're above all the moving averages. You have higher highs, higher lows. It's, I don't know. I think this is one of those moments in price action where it's really easy to get run over if you try to anticipate the downside. So I'm not shorting. Are you still holding any shorts?
I still hold some index shorts, yeah. We do have the Fed meeting next week. I imagine it's going to come very much in line with expectations.
They're staying put.
Staying put on current rates. Probably won't say a whole lot of
That's what the market's showing. It's like a 97% probability.
Yeah. But, you know, always a source of potential volatility. So we'll keep an eye out there, but unlikely to be out of expectations. And then other than that, it's going to be, I don't know, it's kind of a little bit of a boring month in the sense that like you don't really have earnings. You just have like companies at conferences and like macroeconomic data coming in to kind of figure out what's going on. But October should be a very busy month.
So. I can't wait for retail sales to come out. I think it's tomorrow. We get the retail sales number. It's going to be very telling.
There are some signs out there that things are weakening. We had some airlines out this week actually saying that domestic travel is weakening faster than they thought.
Because everyone's going to Europe, right?
Yeah, I think that is actually part of it. Like
everyone I know is going to Europe.
Yeah, the airlines that have more international exposure are definitely not seeing as much of a slowdown. But that's something to keep an eye on. Certainly retail sales, any signs that we can see of anything changing in the employment picture, we'll be watching that.
Cool.
Daily Dough, we'll keep you up to date.
Absolutely. Go to dailydough.co. Check it out. Let us know what you think.
Travis, you're doing your options class.
Yes, that's right.
So speak about that a little bit and how people can get involved.
Yeah, I'm glad you mentioned that. I almost forgot. So, you know, I've been asked for a long time to put together a course on options, and so I'm finally doing that. We're doing it free for community members. We'll also be allowing others from outside the community to purchase it, but we'll be doing that live next week. And so
on the 19th, right?
That's right.
At 19th. Noon Eastern Standard Time.
Yep.
We'll put a link in the description for anyone that wants to sign up that's not in our community, or you just sign up for our community and you get in it.
Yep. Yep. So it should be good. I'm really trying to focus on making this options course full of practical examples, really trying to help people understand not only the theory behind options, which a lot of the courses and stuff out there already do, but it's extremely dry, complicated, boring. We're going to do a little bit of that so they understand the basics of the contracts and things like that, and then really focus on, well, how do I think about, things like selecting the right expiration date and strike price and the right option for the right situation and things like that. And so this course actually will be focused a little bit more though on beginner, intermediate. Some other time I'm going to do the more advanced stuff. But this, I think, will be a good practical entry into the world of options.
I can't wait.
It's so needed because I think it's ridiculous that somebody could download Robinhood, click a couple buttons, and then just have insane leverage.
It's a real problem.
This is why 90-something% of traders lose their ass to professionals like you. Because
you know how easy it is to mess up options?
Oh, yeah.
It's incredibly
There's so many
easy.
variables. And like you said, people use the right strategy just in the wrong situation or in the wrong way.
Yeah. Even I've done it. I made plenty of mistakes. So, the things like GameStop that we talked about, my options were too short dated. Look at Roaring Kitty. He had longer dated options and he turned 50K into like 40 million at the top. My gains were nowhere near that.
There's always another trade around the corner.
That's right.
And that's why we continue to do this show is help people stay engaged. And I think especially when we're in bear markets or things are slow, that's the time to do the work, to build your skills. And
now is the research time. Yes, for sure.
Cool.
Especially with things falling. Like there are still a lot of names out there in the stock market that are still selling off. And like, that's when we lick our chops and get excited is when shit's just dying.
Absolutely. Yep. All right, guys. Hope you enjoyed the episode. Don't forget, go to wetalkmoney.com, submit a question for the show, leave us a review on your favorite podcast platform, subscribe to the YouTube channel. Tell somebody else about this show. Say, hey, there's 3 weirdos that just talk about money, and you should listen to them yap about it because it's pretty damn educational.
Yes. Well said.
All right. Thanks, guys. See you next time.